what effect is the volatile stock market having on the ability to raise money via Reg A Plus online? So it is a very different climate that we're in. I'm going to get into the Apple privacy moves, which are actually the biggest factor. That change has a far bigger impact than the stock market does. But a couple of interesting metrics. When during March of 2020, it became apparent to the US markets that COVID was going to have an impact here too, not just be confined to Asia or other parts far away. That 3-week period in March when the markets went haywire, our Reg A Plus offerings that were live at that time, and those that stayed live, a couple of them paused their raises, but those that stayed live saw their costs of acquisition of investors increase by about 25% during that 3-week period. It didn't come to a standstill. It became more expensive by approximately 25% to raise money in that time, which I found to be amazingly good. I was really surprised that it was that good. And then after about 3 weeks, after that window of 3 weeks where the volatility was so high, 3 weeks later, we were back to normal. And another 4 weeks later, in May of 2020, the cost of acquisition of investors went down by about 15% because so many people were stuck at home and trapped and looking for interesting things to do. So we got that period of time, the last 2 years, has been, I think, extremely beneficial overall to online investing in general, on Reg A Plus in particular, because so many people that weren't aware of it became aware. We've seen significant uptake in institutional involvement and credibility for the process of raising money online. So it's grown very significantly. The expansion of Reg CF from $1 million to $5 million a year was very significant. That's also been a part of the growth. And the expansion of Reg A Plus from 50 million a year to 75 has also expanded. But the biggest factor really is we've gone as a capital formation process. Online raising of capital has gone from being a tiny little cottage industry that was really looked down upon by a lot of people in the finance business to one that has become respected and appreciated and has grown very rapidly. I'll get into the metrics later. So we've seen the quality and the stage of the companies that approach us these days is so much better than we used to see. It's really wonderful. The companies, the quality of them, the number of customers, the number of fans, their momentum, their profit. We're just seeing so much better companies with so much larger market potential than we ever used to see, because they have become more aware and they have tended to self-qualify before they approach us. So the whole process is so much more efficient for us than it used to be, in part because we publish so much content that helps companies figure out if they should use these instruments, in particular Reg A Plus. So a couple of other interesting metrics. We've had days where most of the investing traction comes from marketing outreach to the great masses of people that aren't aware of a particular company, most up until now, because most of our clients up until now haven't had a large following. We've got some clients now that do, which makes life a lot easier. But when you're having to work for every investment, the typical mechanism is, of course, we email our member base and that has its effect. But the lion's share of the investments come from advertising outreach, usually through Facebook, Instagram, or Instagram, which is owned by one entity. They've been the most efficient advertising vehicle to use. And so somebody's doing something else, they see an advertisement that is engaging enough to draw them into the investment offering page. And then we have a limited amount of time to gain and keep their attention. If they like it enough that they're interested enough to click the Invest Now button and provide us their email and phone number, then of course, as you would expect, those people are hot prospects. They're people that are genuinely interested enough to potentially invest now or later. The thing which has been impressive to me and shows you that so many of these online investors are optimists is that we've had days where on a particular offering, 70% of the people that clicked that invest button and gave us their email and phone number went on to invest on their first visit. You know, when that is happening, Obviously, it's a compelling offering that's being well marketed, but you also know that the nature of these people is that they are optimists. And there's so much other evidence of that. This is Main Street investors. Obviously, accredited investors and institutions are far more skeptical, more difficult to please, and they take their time and do their due diligence, as one would expect. But so much of the raising of capital in Reg A Plus is done from Main Street investors who are so much of the time actually optimists. And I see this where, you know, through the platform, there'll be emails of comments and questions to the either direct emails or comments posted on the offering page for management of our clients to respond to. And I get copies of those so I can help, we can help our CEOs answer those questions and make sure that they do pay attention. So I see the messaging, right? I see the comments, and you know, it's just, it's so nice. It's so nice in a way to see that in a company that's doing a raise and is not planning to do any kind of listing anywhere, no, not even mentioning liquidity, just raising money with no end in sight in terms of liquidity and no discussion thereof. We'll see inquiries about, you know, somebody who invested 3 months ago saying, when's the IPO? You know, there was never any discussion of an IPO, and yet investors are assuming that there'll be one. It gives you a really good sense of the nature of the investors that we see. So that is a factor, and that's part of the reason why we've seen such robust online investment activity during volatile periods of volatility in the stock market. It's helped immensely. Obviously, that brings with it the attendant responsibility to protect these optimists from themselves, so that 3-5 years down the road, they're ecstatic that they invested, not disappointed because their brother-in-law is making them look like a fool at the New Year's dinner. Yeah, we need to protect them by educating them in ways that don't rely on them having to read the 140-page offering circular to find out everything. We need to protect them from themselves to some reasonable extent. Okay, so then what I'm really saying, another key factor is that only half of US households have a stock brokerage account, which tells you a lot, especially when you realize that a lot of the investors that are investing do not have a stock brokerage account. So they're not as tied to the NASDAQ and how it's fluctuating today as are a lot of investors, which helps. Having said that, though, in the current environment, it's perhaps more important to some of our Main Street investors that they're dealing with heavy inflation, they're dealing with ridiculous gas prices and uncertainties of various kinds, both politically as well as, you know, the war in Ukraine and what it might or might not mean. So those kinds of things, the looming recession, house prices, you know, peaking and perhaps declining or actually declining, those sorts of things are going to affect Main Street investors more probably than the state of play in the stock market. But then on the positive side, we've got this new legislation that's just been passed where essentially there's a lot of money and encouragement to invest into environmentally sensitive businesses. So we'll see a great deal more we'll see customers more able to buy from such companies, and our clients that are in this space will be and are benefiting immensely already from this new activity. So there'll be areas that are hot anyhow, right? Especially as more and more people come to conclude that climate change is damaging and we need to do things about it. So more people that reach that conclusion, there's both a motivation to change things as well as to make investments that will do well because of the needed change.